Alright, hello everyone. I decided to review some of my losers from this past week, that is June the 24th through June the 28th. And this is a replay mode of Trader8. You can tell that or distinguish it from my other trading by the fact that I use yellow and grey candles on my main time frame as of now, which is 2K tick chart, and we are looking at ES futures contract right here, and this is from the 27th of June, so that's a Thursday. And here was a setup. What was going on in here? After some beautiful going down and pullback strategy, one, boom, pullback strategy. Second one, if we enter at the teeth, which is a good idea with 2K tick chart because you can place your stop loss like very tight, even just 1 point. This would net a beautiful gain, and even this one would net that's like 5534 going down to 30. So if you go by take profit of 4 points, which I usually do with ES, this would net a nice gain as well. And then it broke to the upside, went all the way up, tested the 200 EMA, and sort of ranged about it. And right around here, I was sort of encouraged by these two beautiful shorts. So you can see how your bias is created in a moment. And I believe that if we finish below the 200 EMA and below the jaw, that there could be another testing of the 200 EMA on the 50-minute chart. So that's right around here, right? Going through the jaw, the teeth, and now trying to break lips, and testing that 200 EMA on the 50-minute chart again. On 1 minute chart and 3 minute chart, it started to look good around here. So the 3 minute chart is breaking its 200 EMA as well, trying to break the jaw as well. The 5 minute chart, not that convincing though. Not that convincing. And if we look at hourly, just let me switch from NASDAQ here. Hourly, that is not that clear as well, because the price got rejected when it tried to go below the teeth and jaw and finish there, so it got rejected, and now it tested the teeth again, and well, yeah, will it be tested again? That was the question that we had no answer to, because we did not see the right side of the chart. So let's see what happens. So my plan was to enter, and I did enter with 3 contracts. If this, let me just set this one up. If this candle finishes in the area below the 200 EMA, so let's see how that one played out. Okay, so I entered here.
Order filled.
My stop loss was 2 points. Yeah, I went with bracket order, just like this. It looked very good at start. We were trying to break through the 200 EMA on the 5 minute chart, testing that hourly teeth again. But then this happened. Boom.
Stop
and I was
filled.
out. Like in a split of a second, even though it was ES. Look at that, in this case, yellow dildo. Refused harder than I did in the high school. Right? So that was just before the market closed this on the 27th. And the area below the 200 EMA got just rejected. So I think I can stop this here. Right, and this was a loss of $300 because it's 1 point for $50 for 1 point, and we went for the stop loss of 2 points. That's $100, and we went in with 3 contracts, so that was 300 loss, and our take profit was 4 points, so that's 2 R's, right? 2 to 1 in terms of rewards to risk, so we would gain $600 on that trade. But you can see this massive 1 minute candle. You can see how it eventually got rejected even on the 3 minute chart, like not finishing below the 200 EMA, and also trying to break below the, even finished below the 200 EMA on the 5 minute chart, but this just got rejected, and the teeth on an hourly were the decider, in my opinion, in this case. And yeah, basically, what was the mistake of this trade is the question. Well, maybe not enough support of the time charts, I would say. Like, maybe I could have waited for the 3 minute chart to finish convincingly below the 200 EMA and the gates as well. The same case as with the 5 minute chart, but then again, the 50 minute chart would be very close to its 200 EMA, so I'm not quite sure about that. It wasn't A++ setup by any means, but when you see the chart like this, right, like this, it's very different than this. So yeah, that was one of the losses. Let's look at another one. Okay, the second one, crude oil, date June 28th, Friday, time 9:20. Oh, sorry, this is central time, like from Chicago. So in New York, it's supposed to be like 11:27 a.m. So what I was looking for here, downtrend, right? We went up. We are testing the 200 EMA on the 2K tick chart. It seems like finishing above it and now trying to go through, but you know, that's like the standard deviation of the data, so we do not take this candle as really finishing above the 200 EMA. So I was looking for a pullback, right? This was on TopStatX, so the charts in there, especially the settings of Gator are different there. So the 200 EMA was there, sort of perfectly aligned with the teeth of the alligator. So actually now price was bouncing off of both 200 EMA and teeth of the alligator. So my trade plan was that if it bounces back and finishes below these two moving averages, the teeth and the lips, I would try to go short, because then this would be a pullback and chance to go lower. That's a tick chart on the minute-based chart. So on the 1 minute chart, we are below the 200 EMA. We are trying to form a breakout strategy. On the 3 minute chart, not that convincing, looked like the alligator sleeping, but we are still below the 200 EMA, so the confluence is there to look for shorts. On the 5 minute charts, we can see the bounce of the jaw in here, and now we are seeing the price tanking, testing the lips, going back about the teeth, going back down to test it again. Just setting up my OCO bracket order, and I set this to 2 contracts because I went in with 2 contracts. Right, so it's trying to finish below the lips. It gets rejected right now, and also on the 5 minute chart you can see there's a nice pullback of the jaw, breaking through the teeth and the jaw as well. On 50 minute charts, we are in the area below the 200 EMA after a nice downtrend, and this now looks like a beautiful sort of pullback, right? It tested the lips and it got rejected. So this is all looking nice shorty in here. On an hourly chart, what we got there? Well, downtrend, breakout strategy with a massive red dildo and quite a lot of space to reach the 200 EMA, right? So it's also not like contradiction to take this trade. On daily we know that oil was on the uptrend, but sort of ranging. Yeah, it tested highs and it got rejected. So let's see. On the 5-minute chart, meanwhile, the candle did not manage to finish below the lips, which should be a warning sign. But I was still quite convinced that this looked pretty well. And I still intended to go short if this candle finishes below the lips of the gator. Okay, so I stop it here. Again, I believe that on tops to backs, this looked more convincing, right? Here on TraderVate, it looks again more like a standard deviation of the data, so not very convincing finish below the lips. But on tops to backs, I do believe that it was more convincing, and this is the point where I went in. So I'll just do this. Say, sell at the market, and my stop loss was actually on 30 points. So yeah, and my take profit, well, if my stop loss was at 30 points, that means that I went for the take profit of at least 2 R, so that means 28, that's 68, right? 67 for commissions. So this was my setup, and let's see how it played out.
Order filled.
I'll stop that. So initially it looked very well, right? On the 3-minute chart it started to look like going down. On the 1-minute chart, beautiful breakout strategy in the area below the 200 EMA. On a 5-minute chart it looked like this was really a pullback. It bounced off the jaw, went down. On 50-minute chart it started to look like it's forming a really nice pullback as well, and there was no reason why the price should not go lower, and this looked really well, right? This is why I do the replay mode on the TraderVate and not just showing the chart, because on the chart you look at it and you see that okay, that was a bad entry and you fucked it up, hey? But that's why it's good to see it in real time as it really happens, because that's the only way you can gather and understand my thought process, like why did I enter, why it did look good at some point. And this was the point where the trade looked good, right? I was like plus 200 at some point, plus 300 of unrealized gains. So this was a good entry, bounce off of 200 EMA, finishing below the lips, and it was a good entry. And sometimes you get good entries, you make no mistake, but still the trade does not go your way. And that's how trading works. That's how win rate of 60 to 65 to 70 at best percent works, right? So let's see how this played out. Okay, let me pause here if I can get my computer and TraderVate to cooperate. So, okay, this went close to break even, 5 points in gain, $100, still not a bad stuff. It seemed like it lost a little bit of steam, but still, the 5-minute candle finished in our favor. The 50-minute candle is looking good. On 1 minute chart, it looks like a slight pullback with the possibility of continuation to the downside. So there was no sign of this trade to go south yet. Alright, now it's starting looking iffy, right? It's testing the teeth on 1 minute chart, and if the pullback from there is not happening, and the jaw at the same time as well, if the pullback to the downside from there is not happening, we are in trouble. Because it was like a sudden influx of buyers here. You can see that on the 5-minute candle as well. And that's starting to look bad. To be honest, I felt like the trade is not going as I imagined it would be, right? So there's always the bad feeling, you all know it. And yeah, now the candle finished above the teeth here, and the alligator looks like it's sleeping, sort of starting to look that way. So again, breaking through the gator on the 5-minute chart as well, and this is the point where I actually should have exited the trade, honestly. So I'll be talking about the mistakes of this trade at the end, but placing the stop loss this high was definitely one of them, and I will come back to that. Okay, so what was happening at this moment? You can see that the gator tried its best, so to speak. On 1 minute chart, it looked like the bounce was forming. At least the gator did not give in so easily. And you can see the dynamics, the momentum of the mood of the traders, the bulls and the bears on 1 minute chart the best. So it tried its best to go down again, but it did not manage. And the candle finished above the teeth, above the jaw as well. On the 3-minute chart, a candle as well finished above the gator. On the 5-minute chart, the candle finished above the gator. I sort of ignored this because if you are in the emotion of the trade going your way for $300 in plus, and then suddenly it turns to be minus 300, right? So basically losing $600 in a matter of a few minutes, it gets to you a little bit. So that was a mistake of my part. So this was definitely the second major help from the alligator for me, calling to me to get the F out of this trade. So that was the first mistake, as we speak, to not get away at like 81.36 ticks when this candle finished above the gator. I should have just killed it and go on. But okay, that could be painful if the price is if the price just turns and goes my way. The second one, when the time frame, the second and the main mistake was when the time based charts like confirmed that my thesis is no longer viable. There, on the 1 minute chart, 3 minute chart, and 5 minute chart, when the price finished simultaneously, or not simultaneously, but in the same run up above the 1 minute chart, 3 minute charts, and 5 minute charts alligator, that was the second and the main sign that I should leave this trade. Now it's going up to test the 200 EMA with the jaw on this chart of trader 8, and we can see that the price went back down to test the jaw on 1 minute chart, went back down to test the gator on 3 minute chart, went go back down to test the teeth and the lips on the 5 minute chart, and it failed. It failed to break out, to break through and go continue down. Instead, it was rejected and the price went back up again. So that could be taken as the third sign that I should be leaving this trade, taking the L while it's smaller than is my stop loss. Okay, so let's talk about the stop loss. 30 ticks for a crude oil trade is a lot, especially when you're more than one contract in. But my reasoning was to be above the previous highs of these candles and above the jaw of the 5-minute chart. Ideally, just slightly above the 200 EMA on the 1-minute chart, even though it's more of like on the 200 EMA. But 1-minute chart doesn't matter that much when you've got like a 5-minute chart and being above the jaw, being above the previous highs. Also, I wanted to have it above the lips of the 50-minute chart. So that's here, and of course above the 200 EMA and the jaw of the main 2000 tick chart. So that was my reasoning why I placed it that high. And it was not a bad decision per se, but it was a risky decision because 30 ticks as a stop loss on crude oil is a lot, right? So now we went up to test the 200 EMA and the jaw of the 2K tick chart, and I had no business in this trade anymore. I was supposed to be gone for a longer period of time, for like 5 minutes already, right? Alright, so at this point it tested the jaw and the 200 EMA. I'm down like $300. It was rejected at first, so I was in a state of mind like you all must be familiar with this. It's the fuck it kind of mentality. Like, okay, it can reverse and go again my way, or it can just go up and hit my stop loss, which is at $600 right now. So why would I kill the trade here and lose $300 when I can lose twice as much at $600, right? So it's like they're not thinking very rationally, objectively, and killing the trade because you want some kind of hope that it can turn in your way. You want some kind of vengeance towards the market because it didn't go your way. And instead of objectively, coldly, and with straight mind killing the trade while being $300 down, you just wait until it hits your original stop loss, which is twice as much money. But yeah, maybe I'm being way too harsh for myself. That was just like the general situation you all must be familiar with. But this was still not over, right? Like, this was still a good chance that this would work, because this was basically the rejection of the jaw with the area of the 200 EMA. This was very close to the jaw of 5-minute charts and got rejected. And also the lips of the 50-minute charts were not yet tested, but the price, we can see it on the 1-minute chart and 3-minute chart especially, began to be a bit stagnant. That means that the bulls, the people pushing the price higher, were not as strong anymore. So it was not all over. That's basically what I'm trying to say. It was not like, fuck it, I'm gonna let it to hit my original stop loss and punish myself just out of spite, right? So this was still, there was still objective chance, not just hope, but objective chance that this can turn and go my way, even though I would prefer to exit the trade at the points where I mentioned before. Okay, so here we're testing 200 EMA, jaw on 2K tick chart, we're testing jaw on 5-minute chart, we're testing lips on a 50-minute chart. So those are nice resistances which are giving me chance that this might turn my way. So I just let it happen, but this was the killer, breaking through all of them. And just basically after this move, basically it was over. and this was the moment where, out of spite and as a way of punishing myself for this trade, I just let it to hit my stop loss, basically, because it was clear now that it would get hit. And instead of $500, which you can see now, I took the final L of $600, because in that emotional state, it can get against you, and I'm not that good at taking losses still, to be perfectly honest with you. So I'm not perfect, I'm just saying as it is. So alright, so here the market was giving us the bit of a torture, classic, yeah, false hope that, look mate, I can finish this candle below the 200 EMA, and the join you still had hope below the lips of the 50-minute chart, and actually not finishing, I mean actually going back from finishing above the jaw on 3-minute chart, or 5-minute chart, sorry, and this can turn, this can still turn in your favor. Well, can it? So the candle actually finished below the 200 EMA, even though it was tested, even though it went up like 3 ticks away from a stop loss, but it did not have enough power at that point of the time to finish above there and go bullish. The same 1-minute chart, it did not reach the 200 EMA, but turned. It is pushing back from the lips of the 50-minute chart and diving back down on the 5-minute chart as well. So we had some chance at this point again, and the hopes were higher. Alright, actually I'll just speed this up to 200% because it's starting to be in the territory of watching the paint dry.
Stop filled.
Alright, so finally the misery was over. Actually the pullback strategy on 1-minute chart is what slit our throat, and that was $600 down, with not forgetting that this was on top Cebex, so that was like ×3, so a little bit of painful 1.8k loss in here. And did we do some mistakes? So the entry was good, right? The entry was okay. Putting the stop loss that high is not a mistake per se. I mean, when you adjust your take profit to the right area, like at least 1 to 1, 1.5 to 1, or 2 to 1 rewards to risk, then it's okay to have to have bigger stop loss, right? So that was not the mistake. The mistake in this course of the trade, in managing the trade, was not killing it when there were clear signs that it's not what I want it to be, and that my thesis is not supported that much anymore. What is a good thing there is that I did not move my stop loss higher, right? It forces you somehow to that psychological stuff, right? Like if you push your stop loss higher, in this case, you are still in the trade, it's not realized loss, you will avoid pain of taking the loss, you still have hope, right? And you can push it just a little bit higher from the 200 EMA, the 1-minute chart. You can push it just a little bit higher to be above the 200 EMA on 50-minute chart, which is a strong one, so you have a higher chance. If you push it just 5 to 10 ticks higher, it's even above the teeth of the 50-minute chart. So you have much higher chance for the reversal and for the trade going your way and to escape at least at break even, right? Which is nonsense, because if the trend reverses and you panicking and you exit at the break even, then the price goes your way, your original way, and even oftentimes even hitting your stop loss. But it's all just the trading in the zone stuff, right? Avoiding the pain, feeding the hope, keeping it alive. Nonsense. So yeah, that was the mistake. This could have been easily just, I don't know, 200, 300, at some point $400 loss per account. So maybe around 1k, 1.2k loss. Instead, that was $1,800 loss. So yeah, a bit painful, but that's what happens in trading, and I'm sure many of you can relate. So I believe that's it. I will look at gold. If I had some losing trades, I mean, I had some losing trades there this week as well, but if some of them are worth showing you some stuff, and if yes, then I'll load it up just after this one. If not, that's it for now, because it will be a long video already. So yeah, cheers.